The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien.
Welcome, folks. We have the Dow Industrials up 135, Nasdaq's up 40, S&Ps are up 20. The gold contract's down $17.90. We take a look at percentage-wise out here. This is what you have happening, folks. There she is. Over in Europe right now, you get the DAX up 3%, the CAT's up 3%, the FTSE is up 1.47. Our markets, point-wise, the S&P is at 21 bucks is a good number. That's still 0.7%. If we go over and we take a look at what we have happening in these markets right now, we take a look at the SPY first. We'll bring the SPY up. The SPY right now is trading at the 143. Actually, I'm going to bring up the future because the future is going to be easier to read because the dividend was pushed out of the Dow. Out of the Spider. So right now we're at 2118.25, and it's 2119. That's what it's going after. 2119, folks. 25. We did that on the 18th, and we had that at 92,000 contracts up at that high. We'll see how it's going to handle that contract. Right now, there's not enough juice behind the move. Right now, when you're taking a look at this, it'll probably start the next 10-minute one right at that move, but you're talking only 4,000 contracts versus that 92,000, so it must be 40,000. 1 second. Yeah, it's 40,000. So you're dealing with 40,000 contracts going into 92,000 contracts. Bottom line is that that is still not enough to get it up and over. You can expect this volatility to continue in a big way. No two ways about that. If we take a look at the Dow Industrial, so the Dow right now is up $1.34. The leader inside the Dow is Disney. That's up 179. We have Goldman Sachs up 335. Well, let me look at gold. Is that a breakout? Let me see this thing. Look at that. She's got some juice behind her, that's for sure. Well, she doesn't have, let's see. So we're at 107,000. No, it's actually, put this on a monthly. I see. Okay, so Goldman Sachs, what Goldman is doing is coming right into the downdraft of 2007. Goldman's going to need a lot more energy. Man, oh man. So check this out. You're coming into you're coming into 104 million. And last month we did 10 million. You got to be kidding me. That's not even close. So it wants to test that area, but it's not even close. 10 million to 104 million. That's about as anemic as you can get, folks. Gold contract. Let's go over to gold. So GCQ5. What we have with gold out here is this. Gold had a wide price spread, accelerated volume on Thursday. You're pulling back underneath that level. You've done that thus far with dramatically lighter volume. We're talking 178,000 contracts versus 191. You're at 1182.70. What if you're a bull, you'd really want to see this close over 1183.10. Where 1183.10 is that's where it had gapped away on the 18th that morning. Goes topside, has the juice behind it. Your second area here is the 1178. Where I'm going with the 1178 is this. 1178 is the high of the 5th of June. What it also is, though, when we came off the 1175.10 on this contract, is where we came off the low on March 18th. That area there has monster volume. If we go over and we take a look at the GLD, and let's do that correlation inside it. What you're going to see with the GLD is this. The GLD right now is pulling back in 1.3 million shares. You're pulling back into 6.4 million. So it's going to need a lot more juice in order to basically break down at these levels. We go take a look at the bond market. What the bond market continues to do, this is going to be really interesting watching this bond market shake out. The reason is that the 10 and the 30-year, folks, actually had got a little juice coming off this low. We had gone straight down since April 1st. When we come off that low, though, on June 11th, there was some good price movement in there, a couple days of it. What has happened, that was bottom line, couldn't handle the higher price. The volume contracted dramatically on Friday. Now you have volume, so you get 656,000 contracts. I suspect that's going to end up doing a million and a half, but you are getting some traction on the way into lower price. If we go look at the 30-year bond, what we have with the 30-year has done 118,000 contracts. You're down almost 2 points. 30 is going to need some more juice. 30, maybe will tell us, sometime today, tomorrow morning, if in fact it's going to reject this 149.06. I don't think it's going to hit it today because we're down 2 full points already. That would mean it has to go down an additional point. What we do have is that at 149.31, we're starting to get into the high of the low bar thus far. The low bar thus far was generated out here on June 11th. So in that aspect, bottom line is that wants lower price once again. King Dollar, what we have with King Dollar is that King Dollar is building huge cause. You get an ABC structure on the way down, and divergence, no doubt, is out there because what you do have is that this market has volatility in it. It each and every day, or whether we're going up or down. Bottom line, they're very fast moves, and I expect the next move inside this dollar is also going to be a fast move because the dollar is in the B to a C, a C to a D of an ABC structure on the way down. Those are straight line moves. We've gone sideways for 3 days thus far, but those are straight line moves. It likes to go fast, furious, all of the above. Some of the high volume stocks, and today will be a low volume market, is that we have. Let's go take a look at this. We have Apple up 93 cents. You get Facebook up $1.60. You get Cisco up 3. American Airlines is up $1.27. Let's go look at American Airlines. American Airlines has been the biggest dog out there, and it's been bouncing around quite a bit every day. AAL. So we take a look at American Airlines. Yeah, she's got okay, so she's up 4 million shares. She's going into 51 million. That's it. This is just going back to ICE. So Americans trading at 42.81. ICE is laying, well, you get, ICE, the first part is 44.38 up to that 46 area. The transports in general, the transports have been leading this all the way down. The transports are up 82 today. And the transports... So the transports were pushing. Now this is where this gets wild. So the market itself on Friday, option expiration, was pushing down with monster volume. That's saying to me that that's where the market wants to go. The transports were pushing higher, and that's saying, hey, guess what? These transports more than likely are going to try to get to the higher swing point off the bottom, which is 85.40, and right now we're at 84.94. Now, what you want to watch on this move is this. If you get into that and we just die in the vine, well, guess what? That was the test. That's the test of ICE. Bottom line, ICE is set up on the transports at the 85.27 level, which is approximately 30 higher points than where we are right now. What we will see out here today, you're going to see light volume. This is Monday, summer trading again. And remember, last Monday, we didn't have light volume, so it's really going to be interesting watching this whole thing shake out to see does the volume continue heavier on a Monday. And what we have here now, this is what the divergence is. Not divergence, but this is what the market is going to, the type of information that's going to give out today. Last Monday, we had moved lower, and the volume was expanding. It was like, wow, this is pretty wild. Bottom line, we move higher out here today, and the volume contracts. That's another indication that lower prices are coming at us. Inside the NDX 100, what's moving the Index 100 today is that you get American Airlines, that's up 123. Express Scripts is up 255. Vipul is up 14, and Vodafone is up 86. Taken away from it on the way down, we get Wynn Resorts down 162. That thing has been getting smoked. Priceline's down 11.97. You get Tesla off 230, and Symantec is down 25. Some of the Dow stocks out here, Big Blue is up 87. International paper is off 220. Let's go see what's going on with international paper there. That's an unusual move for a Dow stock. So she's doing an ABC structure on the way down, has been in a downtrend in an extraordinary way. Look at that, baby. Okay, so she's off the highs of 57. You're at 48. And we put this on a weekly. So she's already broke one swing point. Yeah. So this this is also now this one's subtle. You know, we talk about this October 14th, the week of October 2014, the swing low. This is a high volume swing low also. It's already into the well, it's approaching the top of that. The top of it is 47.13. The low is 44.50. It's going after it. So this is just another indication that that October 2014 swing point is not only still game. Each and every week we end up having, you know, another equity expand down into that whole area. Okay, so that number, folks, is an important number to keep your eye wrapped around in a huge way. If we go over to the XLE, the energy complex is still having a tough time getting any price at all. You know, there's sellers inside this energy, and I suspect they're very large sellers, and they just continue to sell away. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials up 131. Nasdaq's up 41. S&Ps are up 20. Gold's down 19. Silver is down 3 pennies. Platinum's off 22. We're going to be right back.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Don't forget, folks, at TFNN, we do 10 hours of live programming every trading day. You can get it right on your cell phone, tfnn.mobi. If you'd like to get Tiger TV, just go to tfnn.com. On the right-hand side, you're going to see a little box. It'll have, little pictures of whether it's computer, phones. Hit that. It'll bring up Tiger TV for you. You can get the charts as well as the audio. Our man, Mr. Larry Pesavento, just started a great new service. It's Fibonacci 27x4, 24x7 rather. Check it out on the front page of TFNN. You can test drive that this month for $47. That's a money-back guarantee. The service will end up next month being $97. But bottom line, great service. Larry sends out charts 24/7. And those charts are indicating what he thinks different indices, commodities, and currencies are looking at. Great service. Check it out right in the front page of TFNN. Okay, so if we come over to the markets out here, this is all, let's see. So we're talking, you get about another hour and a half. We get about another hour and a half on the European markets. And the European markets out here, folks, are just, you can see what is intriguing out here this morning is this, is that, the DAX is off its highs pretty good. The DAX, we're trading at 11,400, but DAX is up nice today, okay? But you're down 900 points off the high. What we have done is that percentage-wise, the DAX has been flirting with 3.5% on the way up. That context, though, that's what you can see. It's the German banks, folks, that are on the hook in Greece. That's why you're seeing an expansion that's very quick like that. We'll see if, in fact, there's a deal done. I suspect that it's still going to get kicked down the can because what you did have was really intriguing, man. You talk about a game, a heavy game. What you had out here is that the right off the bat last night, you had the Greek Prime Minister come out, saying that he thought the deal was going to be done today, and that's pretty amazing because each and every time that they sit down, meaning the Greek Prime Minister plus the creditors, the meetings have lasted the last two times, all of 45 minutes and an hour and a half. Bottom line is that, I suspect that nothing is going to change. What is happening every single day is that the European Central Bank is pumping money into the Greek banks because the Greek banks, they're claiming that they're not having a run. They're having a run extraordinaire on their cash, folks. The thing that's amazing about it, so think about this for a second. So you have the aspect of the default. That's the first part. And that's what the market is looking at. The wild thing is that every day the European Central Bank continues to give the banks more money. Now that portion, they don't have any money. They got to give more money because everyone's taking money out of the bank. And you know how the banking structure works, folks. There's never enough money in the bank to pay everyone back. If everyone gets their money at the same time. That's the thing that's so bizarre about all the banking systems, okay? Because what ends up happening is that you give the money to the bank, they give you a percentage. The bank lends it out. In this case, the banks have so many bad debts when they're lending out, guess what? That money's not there. So the European Central Bank has to continue to give it. That's going to be the number. That's going to be the story, you know? And so they're going to keep it alive. And when I look at that aspect, I'm saying to myself, you know what? Bottom line, it's the 30th. Today's the 22nd? Today's the 22nd. So you got 8 days. That 8 days is where the number is. No two ways about that. Let's go over and take a look at those NQs, because inside the market out here, the NASDAQ would be the strongest index. And what the NASDAQ has just done, the futures have done, is that we got to a price point out here. No, let's see, NQ. The futures right now are trading up 41. We're at 45, 41, and we're going after that 45, 41.50. So it's pretty amazing how close that whole baby is right now. I mean, it is literally right there. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are up 122. Nasdaq's up 36. S&Ps are up 19. We're going to be right back.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. 877-927-6648. And as a few of our Tigers are saying in the den here, there's no doubt that the battle is on at the top of this range, folks. If we go over to this range and we take a look at it, it's pretty amazing, actually. We've been up here just so many times. And, if we bring this back, so you get the future out here at 21.17. The high on this contract. And you got to remember something. The contract value every 20 months, the S&P's the value basically goes up because you're going into the future. The contract on this one is 2126. When we bring it across, though, if I go into the cash, and this is why the cash is really cool looking at, it's 2119. Okay, so that 2119.59. Now, right now, we're over that. We're at 2126.653. So that benchmark there, I think, is really important, okay? The reason being is that what does happen is that it's all the 500 stocks trading, number one, before the number can be established. And that in itself is not the high. What that number is that I'm using as a benchmark right now, that was the first high that was generated on the 25th of February. What has also happened is that the market has had a very hard time staying actually over that cash number. We got up into that cash number. It got established on February 25th. We went down into the 2044 number. You climbed back up, and it took two full months to get back up there, and it didn't hold. The first time that we went up there, it couldn't even close up there. We went back down again into the 2067 number, came back topside again, and held for 5 days. Now, watch what happened, though. You held for 5 days at the high, from the 18th of May going over to the 22nd, and then you come off down with a vengeance. We came down on the 26th with big volume. Bottom line, we're down again. It got up into that level last Thursday and held. Friday it didn't hold, so today's a big number on this. We go over and we take a look. We bring this now right into the future, and what you're going to see in the futures is that the battle is right here. On Thursday, this traded as high as 2119.25. We got to 2119 thus far. The correlation inside of this is that if we break this down a little bit further on a smaller basis, it has not got the juice in order to get up into this 2119. I do expect what you're going to see is that it's going to get tested one more time. The reason being is that the first test this morning was on lighter volume. But as of today, that's the heaviest volume we got. You're dealing with 90, I think we were talking about 92,000 contracts. Yeah, it's 92,000 contracts. That was the high that was established at 12:30 on the 18th. So in order to get up, over, and bust through that, you're going to need some big numbers. And, we'll see how that shakes out. If we go over to the SPY, and you look at the correlation inside the SPY is actually dead on the vine. There's only 20 million shares trading in the SPY right now. That is so anemic, it's insane, because you're going into 124 million from that downdraft that I was talking about after the S&Ps had stayed at the highs for 5 days. So when we had come down inside the SPY on the 26th of May, you went downtown with 124 million shares. That was after making a high with 76 million. So the way that is setting up right now is that that's setting up that higher price also won't handle it. Inside the Qs, what we're dealing with, you're up 81 cents. We're at 5.7 million, and yeah, you're going into 43 million. So that's not that bad, really. You know what I mean? And the longer that the Qs hang at these highs, by the way, the higher probability is that, yes, they do want to break topside. That's not my take, but what you have is that the longer you stay at the top or a bottom of a trend, the higher probability is that you actually will break topside. Inside the XLF, that's the only one we hadn't gone over yet over the large indices. The XLF is up 44 cents today. You're at 25.18. That number there, we bring this back. Let's put this on a weekly for a second. And what you're going to see on the weekly, the number on the XLF is 2507, 2507, 2508, 2514. So we're right at where the last highs were generated. The XLF, however, last week we pushed higher with 202 million shares. Now that was going into 227, I think. Yeah, 237. So that's not bad. That's still lighter volume, but that's like, okay, you're going to test that one more time because, percentage-wise, yeah, 37 million shot, that's a lot when you're talking 200 million. It's not a lot, though, in the context of exactly how long it's been up here and it's been hanging tough up here. If we go over to Berkshire Hathaway, we take a look at Berkshire Hathaway. Berkshire Hathaway is the largest weighting structure inside BRK. The XLF at this particular point, Berkshire still has a problem. Berkshire is at 141.88, up 92 cents today. We go look at JP Morgan Chase. JP Morgan has been hitting highs out here, continues to hit highs. Now, JP Morgan Chase had volume on Friday. Let's put this on a weekly. It's contracting, but there's buyers out here. Yeah, if we put this on a monthly, what you're going to see, it's been drifting up when dramatically lighter volume. So we'll see how much longer that baby wants to continue into higher price. Let's go over to BAC, Bank of America. Bank of America has been setting up a beautiful Gartley, folks. It's a sell Gartley, by the way, too. We're up 33 cents right now. And if we put this, Bank of America, yeah, Bank of America is dying on the vine. So Bank of America, this is pretty wild how all these indices have been the exact same spot. We're dealing with June 22nd, and we've been in the exact same spot since January 17th on Bank of America. Now, what Bank of America has done each and every time, this consolidation, the top of the consolidation is $18, 18.03. The bottom of the consolidation is 14.36. If you line up the channels on this, this is a Bud Rolf's classic. And what it is that, channels take a long time to line up, folks, okay? But if you line these babies up and you take the top to the bottom, what you're going to see is that all the juice, the building cause on this is each and every time it's lower versus higher. The first time we made a high out here on a weekly, you did it with 570 million. You tested that with 202 million. The first high was that high generated March 21st, the week of March 21st. It tested it January 2nd, the week of January 2nd. Downtown, you had 750 million. That was May 9th. And then you came back down again with 701 million. That was on January 16th. We're going up to the highs again, and we're averaging at the highs right now. 384 was 2 weeks ago. 385 was last week. The prior week with that was 398. You start setting those babies up. What that sets up is that you are building cars to go downtown versus going uptown. We take a look at the silver market. Let's go over and take a look at the silver market, SIN5. What we have with silver out here is this. Silver market flat out here today. We are at, make sure I got this right. Okay, that's cool. That works. Okay, so we're at a 1609. You're dealing with 28,000 contracts out here. What we do have in silver is this, is that it had that price spike last Thursday. We got to 1643. What we're going to need here is another wide price spread, accelerated volume, getting into that area. We go back to the gold contract for a second, GCQ5. And what's going to get really intriguing here is that in another 45 minutes, you're going to get the European markets shutting down. And what will happen after that, folks, is that our markets will get more volatile. The reason being is that if they do have any type of announcements that are going to be made, they will announce those babies after the European markets close. The gold contract right now is at 1183.30. Bottom line is that I expect that you can get some kind of rejection of lower price. One of the main reasons, if you remember when gold was up $20 the other night, that was all about basically the run on the banks in Greece. That's what it had to do with. They shut that down as quick as they can, meaning PR-wise, saying that no, they're going to continue to put as much money as they need into those banks. But that is a big number, folks. There's no two ways about that. So we'll see how the shakeout comes down as to the aspect of what the bailout is versus what is going on inside the actual banks. We take a look at the XAU, the HUI. XAU out here is backing down. We're at 69 cents right now. And right now you're trading out at 65.95. That's going into the swing low that was out there of 65.43. We take a look at the HUI. What you have with the HUI is this. HUI right now is at 154.02. That also is backing down into this aspect of 152.70. The 152.70, I do expect that that baby is going to get tested. Right now we have the Dow up 151.37, and that's 1 second. 10. There we go. The Dow right now is up 150. You get the NASDAQ up 38. S&Ps are up 22. We take a look at the volume out here. The aspects with the volume, we get 172 million on the NYSE. That's so anemic, it's unbelievable. On the Dow Industrial, that's on the Dow. On the NASDAQ Composite, we're dealing with 432 million. In both cases, light volume extraordinaire. We go back over to, let's see. Yes, we get back over to this S&P. So your cash S&P, this is what has happened thus far. Your cash, your future S&P, we made it to the 2119.57. What we do have here is that I expect that, let's see, the high out there is 2.6. Hey, we'll see whether they make it to 2.6. This lunge forward, let's see what we have. Okay, so if we take a look at this, what you have is that, how many minutes we got here? So we got, you get 7 minutes into it, and we've done 29,000 contracts. That's not enough. That's the bottom line. That's not enough. So we'll see how many more spikes we have, and we'll see whether those spikes basically hold or don't hold. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be right there. Whoops. Sorry, 1 second, folks. Sorry, folks. Okay, so we go to the small caps, the IWM. What do we have with the IWM out here? IWM that has broken topside. The IWM is at 128.57. We got over the 127.17 area. And 37 million. So on Thursday, we had gone topside. Thursday, you go topside. Let's see, the 18th with 39 million. Friday, it was basically tested. So we're dealing right now with, right now we're dealing with 37 million. You know, we'll see, in fact, if that can break the 37 million and hold the price point of 127.13. Right now, it looks like, realistically, it actually could do both. So you got Honeywell up 50 cents. You got 3M up 161. Coca-Cola's up 36. You got Oxy up 49. Walmart is up 30. You got Intel up 87. Amazon is up 210 AMZN. Let's go take a look at Amazon and see what we have happening with Amazon. So Amazon is still in this consolidation. You know, it has two separate gaps, higher highs with juice, by the way. But, you know, that gap that's opened is disaster, meaning that I wouldn't be buying it. These gaps will get filled, folks. Bottom line is that just take your time, let that gap get filled. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up 142. Nasdaq's up 34. S&Ps are up 20. We're going to be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. 877-927-6648. The S&Ps are still struggling up here. This is a wild, folks, depending on how long you've been in markets, when you're at highs like this, it's normal that you keep pressing highs and pressing lows. After you press them, it either busts higher or it gives it up. What you have here is that this last surge forward only had half the amount of volume. We had 41,000 versus 92. We know what it is. It's 92,000. So you did 41. As soon as you give it up, which it did, now we're under the 19 again. What that sets up is what? That sets up, okay, what type of strength is going to be on the way down now? Because when you have half the strength on the way up, that's like your probability is pretty good that it's not going to make it. Because what you do have is this, is that it doesn't mean it won't go for it again. But when you look at markets are all about energy. You get energy moving higher, energy moving lower. A huge amount of energy was just expended at that 2119 area. The next time that we go test that area, the way you want to look at it as to whether we're going to go higher or lower has to do with how do you come into that bar. If we come into it with higher volume, even 5,000 more than the 42, that's a good indication that guess what? You get momentum to the top side, and you will bust it. If you come into that with lower, that is saying that the market's getting tired, because that the market has already told you that it's got tired by the point of 50%. So it's pretty neat. You can learn a huge amount about markets when we're at these levels. The reason being is that it's either going to bust higher or bust lower, and when it doesn't break out, or if it breaks out and fails, a failure on a breakout or a breakdown are some of the best trades out there. The reason being is that what you do have on a break top side is you have plenty of folks that just buy into that breakout. They like breakouts. Bottom line, breakouts have worked in this market, whether it was volume or not, because the bottom line is we've been breaking topside for 5 years. That being said, once you break back into your lower range, what ends up happening is that you get an acceleration on the way down, number one, and then what you also get is you get a huge expansion of volume, because what normally happens out there at that particular point is that you get an aspect of the amount of people that bought the breakout and they can't handle it. Well, of course they can't handle it because it's coming down very quick. We just had the sales numbers come out for houses. Previously owned U.S. homes in May sold at the fastest pace since November 2009, driven by first-time buyers and indicating momentum in the residential real estate market. Closing on existing properties, which occur a month or two after the contract, rose 5.1% to $5.3 million. Bottom line is that what you do have in housing, folks, right now is that you have a credit market that is loosening up. You have an expansion of price, and then I suspect what we also have is that when you look at that bond market, there's plenty of folks that know that, hey, this has been at lows for a long period of time. Right now, the 10-year is at 2.3. That'll still give you a 3.8 to 3.85 30-year. People are getting off the fence, and they're basically out there buying. That's the first part. The second part, I think, is a lot bigger, and I brought this up, many times before, and it has to do with the aspect of the amount of folks that were born, from that 1980 area. They're coming right into their beginning of their peak. This thing's going to be peaking for quite a while. This is Tom O'Brien. This is TFNN. You stay right there, folks. Our man, Mr. Basil Chapman's going to be coming up next. Growling and prowling with you. Dow is up 149. Nasdaq's up 33. S&Ps are up 21. Basil's going to be coming right up, folks. Have a great one. Have a safe one. Look forward to speaking to you this afternoon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.